Hi everyone, welcome to week 6 of the course Corporate and Business Law. Today we will be discussing the topic on Indian Partnership Act 1932 and also about Limited Liability Partnership Act. So before we start today's session, let me ask you a simple question. Why do you think people start businesses together instead of doing it alone? So imagine two friends named Ria and Kunal. Now Ria is great at designing products, whereas Kunal is excellent at marketing and selling the products. Now individually they struggle, but together they create a profitable startup. Now this natural human tendency to combine skills, resources and efforts is the foundation of partnership. Okay? Now, as per Section 4 of the Indian Partnership Act 1932, partnership is defined as the relation between persons who have agreed to share the profits of a business carried on by all or any of them acting for all. Now, notice how beautifully this definition flows into three important ideas. Firstly, there is a relation between the persons. Secondly, they share profits. And lastly, the business is carried on with mutual agency. So, this definition is short but extremely powerful. Every word in it forms the elements of partnership which we will be discussing now. Okay, so right now we will start understanding elements of partnership. So, partnership does not arise merely because two people work together. It arises only when all essential elements are present. Okay, so let's understand this based on a case study. Okay, so first of all, a partnership is an association of two or more persons, which means partnership is a relationship between persons, not objects or institutions. So what you need to remember here is there has to be minimum of two persons to start a partnership and maximum 10 for banking businesses and 20 for non-banking businesses. For example, if Rahul runs a shop alone, it is called a sole proprietorship. If Rahul and Aman jointly run it, the first condition of partnership is satisfied. Now this naturally leads us to the next requirement, that is agreement. So agreement is also one of the essential elements of partnership, which means partnership is born out of a contract, not by accident, not by status. Okay, so there must be mutual consent, and agreement can be written, oral, or implied from conduct. Okay, now let's say two friends start running a cafe together. They never sign any document, but both invest money, both manage operations, both are sharing the profits. Now, here in this case, partnership exists due to implied agreement. So, this agreement must be for carrying on business, which takes us to the third element. Okay. So the third element is the partnership must be for carrying on a business. Mere co-ownership of property does not amount to partnership. I repeat, mere co-ownership of any property does not amount to partnership. Let me explain this with an example. Let's say two brothers inherit a building and earn rent from it. Now they share rental income. Does this become partnership? Absolutely no. Why? Because they are not running a business. They are only co-owners earning income from that property. But if they open a co-working space in that building, manage tenants, staff, and services. Now it becomes a partnership because business activity is involved. Now, this business must be carried on with a clear intention to share profits. Now, that leads us to our next essential element for a partnership, that is, profit sharing is a strong indicator of partnership. But remember, sharing of profits creates presumption of partnership, but it is not a conclusive proof regarding the existence of partnership. Okay? Now let me explain this with an example. If A receives 10% of profits as commission, he is not necessarily a partner. He may be an employee, or he may be a manager, or he may be a consultant. Now, hence, profit sharing alone is not enough. Something more is needed, and that something is the true test of partnership, and that takes us to our most essential element of partnership, which is mutual agency, and also called as the true test of partnership. Now, mutual agency is the heart and soul of partnership. Mutual agency means each partner is both an agent as well as a principal of the firm. What does this mean? Let me explain in simple words. One partner can bind the firm is bound by the acts of the partners, and each partner represents all others. Let me explain this with an example. Now let's say A, B and C are partners in a furniture business. Okay. Now A purchases wood for credit from that firm. Okay, from the same partnership firm in which they are working. Now a firm is liable. Now B and C are also liable. Even though B and C were not present when A made the purchase of that wood, still A's action binds everyone. Now this is why mutual agency is called the true test of partnership. If mutual agency is missing, partnership does not exist even if profits are shared. Okay? Now, let's connect everything that we discussed. What if two people share profits but they cannot bind each other legally? Will there be a partnership? No, here the partnership does not exist. For example, two investors agree to share profits from a movie. Neither can act on behalf of the other. They have no authority to bind each other. Now they are only sharing profits, but they are not partners. So the real test is not profit sharing. The real test is actually mutual agency. So this concept forms the backbone of partnership law and helps distinguish partnership from other forms of business organizations. In real business life, not all partners play the same role. Some partners are active, some partners are silent, and some even unknown to the public. Now, this brings us to our next concept on types of partners in a partnership firm. So, let's explore. Firstly, we have a partner called as active, also called as a managing partner. So, who is an active partner? A partner who actively participates in business and manages the day-to-day affairs is called as an active partner and also called as a managing partner. For example, in a CA firm, the partner who handles the clients daily is an active partner. Then we also have a partner called as a sleeping partner or a dormant partner. Now, who is a sleeping partner? A partner who invests capital, who shares the profits, but does not take part in the management. Now, such partner is called as a sleeping partner or a dormant partner. For example, a doctor invests in a restaurant but does not manage it at all. So, here the doctor will be called as a sleeping partner or a dormant partner. Then the next type of partner is nominal partner. Who is a nominal partner? The partner who lends name to the firm but does not invest, does not even share profit, and he is liable to the outsiders. I repeat, please understand here, a nominal partner only lends his name to the firm. He does not invest, neither does he share profits, but however, he is held liable to the outsiders. For example, a famous chef allows his name to be used in a restaurant brand. Now, here, such a partner is called as a nominal partner. Okay, then we have a partner called as partner in profits only. Now, who are such partners? These are those partners who shares profit but they are not liable for any losses. Okay, for example, a retired person with lot of expertise may agree to receive 20% of profits, but he definitely takes up no losses in the firm. Now, such a partner is called as partner in profits only. Okay, so the next type of partner is partner by estoppel, also called as partner by holding out. Now, who are such partners? Such partners are actually not even partners. Okay, they only create impression of being one and they are held liable to the outsiders. Okay, now let's understand this with an example. Rohit allows his name on the firm's letterhead. Now, a supplier gives goods believing Rohit is a partner. Now, here Rohit automatically becomes liable to that supplier because he allowed his name to be written on the firm's letterhead. Here, Rohit was actually not a partner, but he only created an impression of being the partner by allowing his name to be written on the letterhead, and therefore Rohit becomes liable to the outsiders. Okay, then the next partner is minor. Can a minor become a partner? Yes. Now, minor as a partner. How can that happen? Minor cannot become a full partner, and we have understood this in our Indian Contract Act sessions. Okay, but however, a minor can always be admitted to the benefits of the partnership firm. Okay, so for example, a 17-year-old who is not even 18 years of age gets profit share but no liability for the losses. Now, such a partner is called as a minor who is admitted only for the benefits of the firm. Okay. So far, we understood about the definition of partnerships, then we understood about the elements of partnership, and also we understood about the different types of partners in a partnership firm. But the concept of partnership actually becomes more clearer when we can actually compare it with other business organizations. Okay, so let's understand the difference between partnership and sole proprietorship in the first case. Okay, now in case of a partnership, there will be two or more owners. In case of a sole proprietor, there will be only one owner. Okay, now in case of partnership, the risk is actually shared between the partners, whereas in case of sole proprietor, the risk is completely borne by that one single owner. Okay, then partnership. In partnership, generally there are more resources because there are more people, more partners involved. So naturally there can be more resources, more capital contribution. Whereas in case of sole proprietorship, it can be limited since it's only coming from one person. Okay. Now, when it comes to decision making in partnership, it is always collective, whereas in a sole proprietorship, the owner himself is responsible for all the decision making. Okay, so Ramesh expands faster after taking a partner because capital and ideas increase. Now, this is the benefit of partnership. Okay, now let's understand the difference between partnership and a joint stock company. All right, so a partnership does not have a separate legal status. Okay, whereas a company has a separate legal status. That means the members and the company are two different people, they have two different identities. Whereas in case of partnership, there are no two different identities. The partners and the partnership firm are one and the same. Okay. Now, in case of partnership, the liability is unlimited, whereas in case of a company, the liability is limited. Okay. Now, when it comes to management, the management of a partnership firm is completely taken up by the partners of the partnership firm, whereas in case of a company, the management is taken up by the board of directors and not the owners. Okay, whereas and in case of partnership, the regulation is given by the Partnership Act, and for the company it is given by Companies Act 2013. Okay, this is the difference between partnership and joint stock company. Now, let's understand the difference between partnership and a cooperative society. Okay. Now, the objective of starting a partnership could be to make profits. In fact, it is to make profits because, as per the essential elements of partnership, the partnership should be formed in order to conduct business. So, therefore, naturally, the intention of the parties will be to make profit. Whereas, in case of a cooperative society, the objective is generally to provide service. Okay. Now, in case of partnership, the membership is limited because I told you what are the minimum and maximum number of members that is required to form a partnership as per the Partnership Act. Whereas in case of cooperative society, membership is open for anybody. Okay. And in case of partnership, the control is completely done by the partners, whereas in case of cooperative society, the control is mostly democratic. Okay, and the law that is regulating partnership, as we already know, it is Partnership Act 1932, and for a cooperative society, it is the Cooperative Societies Act. Okay, so as we conclude this part of week 6, we see that partnership is not just about working together, it is also about working together with legal responsibility, mutual trust, and shared authority. So, in the next part of this week, we will move forward to understand the different kinds of partnership, registration, rights and duties of the partners. So until then, in partnership, everyone acts for everyone, and that is both its strength as well as its risk. So please remember this and remember the true test of partnership. Thank you. See you.